What's up, everybody? It is Monday. We are live now. This is the signal analysis recap session. And, as we were discussing last week, we are going to be making a few changes again, just with the flow of the actual sessions themselves. Again, on Wednesday, you guys can look forward to the in-depth analysis session. On Friday, we are going to be doing a little bit different things with that, but we'll be talking about that later on. And, for next Monday, there will be a little bit of a change of pace of how we conduct this one as well. But for today, we're going to be taking a look just at some of the signals that have been sent up until now. We've had 3 since the market opened on Sunday, so I know for a fact that 2 of them at least have hit their first and second targets. So there has been some profitable opportunity. When you guys can as well, just please let me know if you can see Eddie's screen. I should be sharing in just a minute. And I'm going to switch it over just so that he's presenting to everyone. I'm going to also double check that it's all good on the YouTube.
Hey everybody, I hope you guys have had a great weekend. You're going to have to bear with me a little bit because I woke up with my throat a little messed up. Might be getting a little sick, but you know what's the best thing about all this? Even if I don't feel well today, we're still making pips. Yesterday it was also I was not feeling that well, but then I come back and look at my charts and I was already 100 pips in profit just on the AUD and USD and Euro AUD. And that's the great thing about trading, right? We have that possibility. We can continue to, make money that we need to make or money that you want to make just from home. Even if you're sick, you're watching a movie. I know not everybody, but I know a lot of people were enjoying the Super Bowl yesterday. I hope your team won. I don't really have a team, but again, it was nice to be able to see and hear from a few of our members how even through that on a Sunday, on a bank holiday. I think yesterday was a bank holiday. I think today's a bank holiday.
We
I
got
don't
bank
even know.
holidays up until Thursday, man. It's like a bank holiday every day this week. So
You see, even with all that, you guys, it doesn't matter to us. It doesn't matter to me. I don't care at all if it's a bank holiday or not. Again, and this is just a tip for everyone out there, if you do hear somebody tell you don't trade bank holiday, don't trade Sunday, don't trade Friday, don't trade any of these days. When you do hear someone tell you that, you just want to ask yourself why they're telling you that, because we've had some of our most profitable days be on bank holidays. We've had, there you go, David, over 250 pips just on the UJ for him during a Sunday, during a bank holiday. We've had amazing days trading these, so you have to wonder if somebody tells you again, don't trade this, don't trade Asian session, don't trade, any holiday of the year, a bank holiday, a Thanksgiving, Christmas, anything like that. Just ask yourself why they're saying that. More often than not, it's going to be because they simply don't understand the market environment, which obviously we do. That's why we're able to consistently trade on these kind of days. If we didn't know, then I would just simply tell you don't trade it. But we've done enough of our trading and testing, live back testing, everything to make these days very profitable. All right, so let's just check out some of the trades that have been sent out. Again, you're going to have to excuse me. My voice isn't what I would like it to be right now, but this is the GBP/USD. And again, everyone, this is just our signal recap session. This is not our crazy analytical session. This is simply recapping what we already saw through our signals that have been sent out in literally not even a day, less than a day since the market opened. All right. So first of all, let's just draw up, because I need you to visually see the targets and visually see certain things about what we're looking at. All right. So yesterday the GBP/USD came out at basically right when the market opened. Essentially, it was telling you buy the GBP/USD at around 1.45, which I'm going to just make a little oval, 1.45 or lower. Okay. So this is 1.45 right here. Let's just say, let's just put a candle, a little oval right here. Okay. So this is obviously the entry zone. It's telling you to get in around this level or lower, okay? The first target that we were looking at was 145,250, okay? 145,250 around here. And we had a second target at 145,500, which was barely not hit right here. And then we had a third target, which was 146, okay? I need you to understand one thing. We are looking to collect at a minimum around, let's say 40 to 50 pips. Our target in this case, we had our first target obviously hit, and we had our second target, which was barely not hit. If you saw this upward move happen and then you saw rejection start happening, I know a lot of those who have the education will look at that as perhaps some reaction happening to this whole zone we have around here and look to adapt to that. But if you had just taken only the signal and you had the opportunity to get in at a better entry, again, this is when the market just opened up, and you have to realize that the spread does widen. I believe it was even, you had a little reminder in the signal as well, just to take that into consideration. Because if you see 145 and you're getting in somewhere around here, you're wanting to get in, if it's in the first few minutes especially, if you had clicked to get in at 860, you may have just gotten in, they may have just given you the entry around 920 or something like that, okay, because of the widened spread. Either way, first target was hit, second target was right around there. The little wick basically went up to that target, but then the third target was obviously not. In these cases, again, you have to be collecting the money that you already have. If you're aiming for target 1 and you get that hit, and it basically goes up to the same candle, it goes up to the second target in the same candle, you start seeing a rejection happening. The worst thing you can do is give back the market the pips that you've already collected. It took, let's just say 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, about 10 hours, and then the target was hit. The second target was barely, it was right around that zone. You don't want to give back money to the market, especially if you already collected your 20 pips, your 30 pips, your 40 pips. You want to make sure you're not giving that back. The third target is obviously, this is 100 pips away. You know even the probabilities, and you know that these our first two targets have basically been hit almost every time. And these are the ones that the probabilities are basically coming out telling you there's a 70-80% chance of this target being hit. The third target is, should it continue in that direction, we're going to have that as an area to possibly look at. But that's not, you can't have this as your, let's say, main target when your first target hasn't even been hit or your second target hasn't been hit. You have to adapt as it's going towards that, which means trailing your stop. You start seeing the price go against you, you're still somewhat in profit, then get out. Get out and see how it reacts. I know a few of you got some nice pips here. This is, let's just say, potentially about somewhere around there. potentially around 50 pips. Yeah, it was right around 50 pips. We were looking for that. You could have gotten more had you entered lower, obviously. Let's just say around 62 pips, 63 pips. So it was a nice little play there. But again, you have to learn to adapt. Obviously, those who have the education, you're going to understand this a little bit more, but that's why we're doing these signal recap sessions. We could just literally, anybody who wants a signal, just here you go, here's a signal, and just take it, as many other services do, and you have to decide basically everything. Obviously, your risk management is something that's dependent on you. We can't tell you put your stop exactly in a certain place, because you may have an account that allows for more, a wider stop. You may have a very small account. You may have certain risk management rules, a certain percentage that you risk per trade. That's all dependent on you, not on us, but we can definitely provide the high probable scenario. Again, those in the education would have easily known where to put their stops. It would have not even been an issue. But still, let's just say we had our 50 pip hit, from 50 to 63 pips. It was a nice little play. And again, just please take into consideration that the third target is not the main target. When you're getting a probability telling you we have a 78% probability of 50 pips being hit in the next few hours, and it gets hit, it literally goes right up to that zone, and then it starts dropping, then you have to adapt. You have to see, well, it didn't go past that zone. It literally went up and touched it, and now it's retracing. That mission was completed in a way, and now I have to see what it's going to do next. There's a reason that the probability wasn't based off of this one. Okay, and we can obviously change the settings and all that, but just between one pair, 50 pips in a day, how many, that's what, 250 pips in a week. Should we only collect 50 pips in a day? That's more than traders are being able to collect in a week, in a month sometimes. You're having that in a few hours get hit just on one pair. Imagine last week, just between two pairs in the last, what was it, 2 days of the market, it was at around 600 pips. Target 1 got hit, target 2 got hit. It didn't just touch it and start rejecting. It went through target 2 and then goes up to target 3. Nice. But you don't need all that. To be consistent, to be making this money, you just need to collect a consistent amount per day. 50 pips is more than enough in my opinion, even though, as many of you know, we like collecting from 100 to 800 pips in a day. And that's not an abnormal day in the market. The market, you have so many pairs moving and so many opportunities. You just have to be spotting the high probable opportunities such as this. All right. So this is a nice little 50 to 63 pips right here. Good job to everyone who took it. Again, just be aware of certain times, such as when the market opens, spreads widen. Be aware of where you should, based on your plan, based on your capital, based on your money management rules, where you're going to put your stop. Okay. Understand, if your target gets hit, what's it doing right after it got hit? Is it rejecting right after? Because if it is, maybe that's a good time for me to get my money, collect it, or put my trailing stop right around the target that was already hit. And should it go down again and give us some kind of rejection and possibly another re-entry to the upside, then we take that again. But that's why we were aiming for those 50 pips. They were hit, so good job to everybody who got into that trade. Now let's just quickly look at the AUD USD. And again, everyone, this is not, we will have our analytical session on Wednesday. We will be having, just some calls here and there with everyone in our community, in other communities. Just, you all know, we trade every day. I'm never going to, at least in my, in the analytical sessions that everyone can see basically my analysis and all that, never going to recommend or share an idea that I'm not personally trading. I mean, I don't know why you would do that, you know? So we're going to do that, and me and Zach trade virtually every day, and we trade virtually every single big event that happens. And so why not just open it up to everybody, you know, and let's just trade together. That's the whole point, right, of community. So that's what we will be doing a little bit later this week as well. AUD USD, what was our entry by AUD USD as 7085. This was at 1026 yesterday, okay? So this is right around here. 7085 or lower. So let's say from here to, let's just say, the bottom of that candle, okay? We're looking for a buy. What was our target? 7105. 7105 is our first target right here. 7135. 7135 around there. And 7200, which is obviously a nice amount up there. Okay, I remember a few. We had some people who, look. Again, this is not. I'm not here to give you a lesson right now. But I feel that we should always, if I can give you any kind of value, I will do that. Those, again, who have the education know this. But obviously, I would, in my perfect world, I would have all of us spotting our signals together from our knowledge, using software and other things as an extra confirmation on top of that. But I have to realize that there are people here who may need to hear certain things, okay? This doesn't apply to those in the education room. We are not the type of traders, I'm not the type of trader, and I know a lot of those in our community are not the type of trader, that when you see down, you sell, okay? Because if that was the case, then over here, this was pre-NFP, when I told everybody my idea is that we're first going to have an upward spike, possibly to around this whole zone, if not a little bit higher, and then go down. Go down where? Possibly to our next zone. Look at where it literally went to, okay? If we were the type of traders that were buying when it's going up, we're selling when it's going down, then we would have been buying when you see a big bullish engulfing candle happen in a few minutes. We didn't do that. We used that opportunity instead to prepare ourselves for the sell, to get in at certain areas. If they happen, we're getting in. We're doing the opposite of what everyone's doing. So for those who get a signal and it immediately, the signal starts going in the right direction. Let's say everybody knows what my analysis was. I told everyone, even on that live NFP call, I wouldn't be surprised to see the price go down, hit our zone, start the new week by doing a small move to the upside, then double tapping down, and then I'm still bullish long term. Okay? But when you get a signal, and the signal's telling you to buy it, and literally look at from 8.5, disregard the candles before it, because it doesn't matter anymore. We didn't get in earlier. Let's just say you didn't take the buy when I was recommending it. Okay? This is literally the lowest point that you could have entered this trade. There's no lower. This next candle didn't go lower until it started going up and hitting our zones. Okay? So if you're having a buy signal happen and you start seeing the price go down and you're the type of trader who is getting out of your position because now you're scared because you saw the white candle, yellow candle going down, and now you're scared to get into this trade and you just get out. I know a few of you who, like, you got out of this trade and literally the point you got out was the worst point to get out, because then it only went up. It literally didn't even go back down to that perfect entry that you basically got, but only because you saw a down candle, you had fear and you allowed that to get you out of an opportunity. That's not how we're trading. And if you're going to be taking signals, then you either have to be confident about the signal with your risk management in place, or don't take the signal. There's no other way around it. I can't really explain it in a different way. You have to, if you're not in the position right now to be able to learn, and this is totally understandable. We understand this 100%. We know we have responsibilities with our families, with jobs, with work, with everything, you know. So if you simply don't want to learn and you just want a signal, and that's all you want, that's what your career, quote unquote, career in trading is going to be, just taking signals, then you have to be confident, at least, in that signal. And if you're not confident, if you start seeing down, and why are they telling me to buy it when it's going down, then don't take the signal. If you're not confident about it, nobody is telling you to take the signal. Nobody is going to force your hand, and at the end of the day, it's your action that you're clicking the button, entering, or clicking the button, getting out at this perfect entry that caused whatever result happened, okay? And again, this is something we've been saying since 2 years ago, okay? I'm not calling anybody out. I'm simply stating something that we've always said and something that always should be taken into consideration. You can't put your money into something that you don't agree with. Should you have gotten out, you missed out on a nice opportunity. We had a potential move over here. Obviously, we hit target 1. Target 2, for those of you who, again, may have put up something on your chart, maybe you didn't, it's perfectly fine, but the price literally went right up to our little zone, a little bit below the target. We had a potential total move of 52 pips. Had you gotten in at the entry or lower, if we had gotten in right at 7085, something around there, we had a total potential around 44, 45 pips, okay? Price starts going your direction. You already grabbed 40 pips. You already grabbed another 40 pips on the GBP USD. That's already 80 to 100 pips. Just off of 2 pairs, and the market is in a Sunday on a bank holiday. Don't trade that, and we're trading it. And this is, again, you already made basically 100 pips in a few hours. You're doing that every single day, and these are small wins compared to the other ones that we've had. Again, last week, I know in total, I didn't calculate the exact amount because, I mean, you guys know, how many pips we're collecting every day. But we had I know we had over 2,000 pips last week between the signals for the entire week and just the 2 analysis that I gave on the AUD/USD and the USD/JPY. And that's, how many pips is that per day? That's quite an amount of pips per day. Do we need that amount? No, we don't. But don't start getting, look, this is the norm for us, okay? I'm not saying we're collecting 2,000 pips every single week, okay? We have losses as well. We recognize our losses. We recognize when a place got stopped out. But we're consistent in what we do. But don't start thinking that, look, we got 2,000 pips in a week, and now if I don't get above 1,000 pips, it was a horrible week. 50 pips in a week is more than other traders make. You will have other groups and other services that promote 99% win rates. I mean, apart from, there's just some practices out there that I don't agree with, such as deleting signals that lose and not recognizing them. That should never happen. That should be something that never happens. I can't say it any way. It's a horrible practice, whatever. But there are groups out there who, they're making 500 pips in a week, on average, and that's great. I love that. Anybody who's making pips and making money, sharing knowledge, to me, that's what it's all about. You're never gonna hear me say anything bad about that. The only thing I'll ever say that I don't like or stuff is when I see ignorance being spread or disinformation or just simply somebody who copied somebody else's thing and renamed it, rehashed it, and they're just regurgitating. Okay, we respect real traders out there, and I love to see everyone profit. But again, 500 pips is great in a week, fantastic. We make that in a day, and I'm not even kidding. You all know this, especially all those in education. You know, Sundays starting out the week with 700 pips. That's not even abnormal, everyone. So if you're getting even 500 pips in a week, or you're getting 100 pips in a week, even 50 pips in a week, with 50 pips every single week, you will make consistent, profitable money. So don't get greedy, and because your target 2 is hit and now it's going, you're like, well, look, we're making all this money all the time, or these trades are so, they're good that whatever, I'm not even going to worry about this. I'm just going to let it ride because it's going to go up there. Don't ever just say it's going to do something. Don't ever just say once the price does this. You don't know once the price. If you know, please let me know. If you know something that I don't know of what the market is 100% going to do, like, let me know, because I don't know. After over 8 years of trading, I still don't know what the market's going to do. I have been very good at predicting what the market can do, but I don't know what the market's going to do. All I can do is use the knowledge and interpret it in a certain type of way, and hopefully, not hopefully, I hate that word, and just let the market play out. Let the market do what it's going to do, all right? But you can't ever say, once the market does this, once it does this, I'm going to do this. You don't know what it's going to do. You don't know that once this target 2 was basically hit, it goes up right to the zone. You don't know that it's going to continue up to target 3. How can you know this? You have to adapt, and you have to collect the profit that you already have. 40 pips here, 40 pips over there. You made 80 to, what was it, from like 50 to 63 pips on the first one. Here it's like, let's just say 50 pips max. You made over 100 pips in a few hours on 2 pairs without doing anything but putting a buy. Collect your money and go to sleep or study or eat or have fun. I don't know. I mentioned to Zach right here when this thing came out, I told Zach, what do I see? I see price literally going up higher than this over here. Look at this zone we have, literally going up higher, rejecting at this area and coming down, giving us a lower hit, and then starting to move up. It did exactly as speculated, to a T. Too bad I didn't have my buy order over here. I have one over here, but I should have put one right there. That was beautiful. This is everybody in education. You should have been. This was gold right here. Great job, though. Another 44 to 50 something pips there, 52, 53 pips. And let's just check out the last one, you guys. Let's check out the USD CAD. Okay, we have, I'm just going to draw, I mean, you guys can see this little line right here. We have a great area. Remember, I think we drew this on the last session. And then, last week, I know Zach and you heard this also. I think you told me there was a lot of talk out there that there was just no stop to the USD CAD, that it was just going to go down through NFP, and it was only going to go down all of next week, and there was just no other way around it. That's just what it was going to do. And then all those poor people got stopped out on Friday, and it's only been going basically back up since that point. Remember, we drew this line, And we were like, well, if it's going up and it's ending around here, why not just take it up to this whole little area of confluence over here? What do you know? It literally went right to that zone. Let's check out the trade though. The trade, USD CAD 13875 at 1 a.m. Okay, so it was right around here. Sell it 3875. 3875 or higher. Okay, so this candle right here. This is one of those trades that, again, you have to take quick profits on these kind of trades. If we're being able to give you a little heads up that, look, possibly price could continue in this situation, in that scenario going up to a certain area, you should probably be aware of that. Either way, the signal's there, and it said there's a certain percentage that our targets will be hit. Let's just see where our targets were. Our first one was at 3855. 3855 around here. Second target was around 3825, which is a little bit lower right here. Somewhere around there. Alright, let's just say around there. And then our target 3 was obviously 100 pips below that. So it was going to be 100 pips. In this case, you literally had your first target hit. There was a maximum that you could have collected on this trade was 44 pips. Okay? Again, if you're seeing price go to your target and start rejecting off of that, that to me is a sign that perhaps that scenario to the upside could happen. You could have collected 44 pips on this. Great job to those who did. I know a couple of you who only scalped that really quickly because you were aware, prepared for a situation like this. Either way, we can definitely see that target 2 wasn't hit. This is one of those situations where I would have just taken very small positions, given that we can see an area that possibly may be hit. Again, I'm not going to go into a lesson about how to get these areas. It's pretty straightforward, but again, this signal right here, we did hit the target 1. Target 2 wasn't hit. I hope many of you collected profit there. If not, hopefully your risk management should always be in place. I don't care at what time or what day or anything. You should always have your plan in the back of your head of what will I do automatically or manually should price go against me. Okay, so here hopefully you made some money. If not, maybe you only got stopped out with, let's just say 20 pips, 15, 20 pips, little expense. If you did get stopped out, hopefully you also made those 100 something pips, 80 to 100 pips from the other 2 pairs. Either way, you could have potentially again collected some more pips over here. Hopefully you didn't give back the market what you already collected. You start seeing rejection at the target, and you're bringing down your stop. The worst I can do right now is collect 10 pips and in profit. That's the worst case scenario. That's how I would have played that trade right there. I wasn't around at 1 o'clock. I wasn't feeling too well, so I wasn't really looking at my chart that time. And yeah, you guys, those are the 3 trades that we're looking at right now. Again, we had our first target hit on the UCAD. Let's just quickly recap. AUD USD, we had our first and second kind of, let's just say definitely our first target hit over here. Second one around that little zone. We had a nice little rejection, downside tap. I'll just give you a little trade recommendation, if you will. Not really. I'm not going to recommend anything, actually. This is just what I'm seeing, my own little opinion. Could be 100% wrong, but if I just see another tap to the downside around 706, you better believe I'm taking a buy. GBP/USD. First target, second target hit. Hopefully you collected nice pips there. We had a total potential of around, what was it? It was like 63 plus 52, 52 plus 44, potential of 160 pips around there. Max potential that you could have collected off of these trades. Good job to everyone who did. If you did get stopped out, please look at why you got stopped out, what you could have possibly done to make sure you didn't give back your money to the market. And yeah, we're going to have an excellent week this week. I don't care, again, that it's bank holiday every day. It's just more money for us. More money more opportunities that we can possibly capitalize off of. All right, everyone. Thank you for being on this call. Zach, I don't know if you had anything else to say. I can't really speak too much more. My throat is like destroyed right now.
Yeah, most definitely. Again, just there's a little bit of echo. Just mute you. Again, though, thank you everybody for being on the call. And as Eddie was saying, and as you guys can clearly see, with these trades, there are times where it may not hit that second target. It comes so close, and there are so many variables to take into consideration, including what broker you trade on, because every broker is going to fill you differently. Every broker is going to have different spreads. And it really just comes down to exactly what Eddie said, not giving back the pips that you have collected. As one of the things that we highly, stress as an important tool is trailing your stops, collecting your profits, and just making sure that, if you are looking to let the trade run on and potentially hit that third target, that you just adjust your stops accordingly. And as Eddie was saying, adapt to what the market is showing you. The worst thing that can happen is you're 40 plus pips in profit, so close to hitting that second target, and you get stopped out with a loss. Just make sure that you at least break even in a worst case scenario. And that is something that we do cover more in depth within the education as well. So we are going to be releasing some updates across this week. You guys, as you already know, can go over to tradeandpro.com/schedule. You'll be able to see all of the live events that we do have planned for the month of February. Make sure that you guys check that, at least once a week, just because we are going to be adding different events in there, different free live talks that we're going to be doing. And, we are going to be alerting of little spontaneous sessions like that NFP event that come up as well. So with that being said, guys, have an amazing rest of your day, and we will see you on the Wednesday session.